Thanks for tuning in the All Funds Network. Today we're here with Sarah Downey and Michael Neff of Lockton. So excited to have you guys on. I know we've had a couple reschedules for the last couple of months, but finally glad we're able to make it happen. Excited to have you guys on today.
Absolutely.
Let's kick it off first. You guys could just do brief backgrounds. Michael, go ahead and start us off.
Yeah, absolutely. So appreciate you having us, Mike. I'm a producer out of Chicago with Lockton. Have a background in the crypto Web3 area from a personal perspective. I've done some investing in funds, have built on certain projects as well, and now sitting in the insurance space, working with great folks like Sarah and her team to help our crypto native clients and prospects navigate this evolving landscape and industry.
Awesome. And Sarah, how about on your end?
Yeah, thank you both for having us. We're super excited to be here. I am obviously Sarah Downey with Lockton. Lockton is the world's largest privately held insurance broker. So we're not an insurance company, but we help facilitate the process, the insurance buying process, and risk management assessment process for our clients. I run our global digital asset team, which we call our LEAP team. It's Lockton's emerging asset protection team, where we work with either, all companies that touch digital assets, whether they're crypto native companies or traditional companies that are branching out. And thank you again for having us today.
Awesome. Very cool. Well, let's jump into it. So with Lockton, let's start with insurance broker. So what does broker mean versus insurance provider, I suppose?
So I'll start, and Michael, feel free to jump in. So we are a broker. So literally we're the middle man or woman who facilitates the insurance buying process. So we help our clients understand their risk exposures. We then help them find the right insurance company partners to transfer those risks to. And especially in the space, we can work with off-the-shelf insurance type of policies, or we can help create solutions that really fit our clients' specific needs. But insurance is such an important part of any company's risk management toolbox. And so we love being part of that process.
Yep.
Awesome.
In terms of Lockton, so with how does it work with the underlying brokers? Do you guys just kind of have like a network of brokers that you call on, or of insurance providers that you guys call on?
We do. So we work with all insurance companies, whether they're like the traditional insurance companies that everyone's heard of, like the AIGs, the Chubbs, the Zurichs. But we also, especially in this space, work with more niche insurance markets who are newer to the space, who are really targeting the digital asset ecosystem. So for us, we do what's best for our clients, and we find the right insurance companies to work with based on our clients' specific needs.
That makes sense. I guess from your guys' point of view, from a Lockton ecosystem point of view with digital assets, what types of insurance? Because it could be a lot of things. It could be smart contract risk insurance. It could be a hack, cybersecurity. It could be D&O insurance. Just maybe give us the lay of the land of what you guys are focusing on from the digital asset perspective. Maybe we'll start with Michael, and then go to Sarah.
Yeah, I'm happy to add some color there. I think this is kind of more Sarah's purview and background. This is what she does, getting deep in the weeds with our carrier partners and our clients, and procuring the proper levels of coverage in those certain areas that you mentioned a handful of them there. But Sarah, if you want to add some color around kind of what we look for, what are kind of the hotter areas of coverage in this space. And I guess, we're always looking to the future as well, things people should be thinking about this year, the next 3, 4, 5+ years.
From like a high level, and we could dive into the details and the different types of companies you guys might work with.
Sure. So from a high level, I sound like a broken record, and I don't mean to, but we really do what's best for each client. So in this space, there is smart contract insurance, which when you kind of boil it down, that really boils down to technology, errors, and omissions coverage. So tech E&O is normally bundled with cyber insurance. So that product insures against the loss of data if there's a cyber breach, but also if the technology itself fails, the insurance kicks in. Most of our clients in this space really kind of start with directors and officers liability insurance, and that every company needs, but that protects both the company's balance sheet, who frees up capital for the company to invest those funds instead of self-insuring it frees up the capital for companies to use those funds to help grow and to invest in the company itself. Directors and officers or D&O insurance also helps protect the personal assets of the individuals running the company. So especially newer companies in this space, they really try to hire folks from law firms, from the government, from the regulators, and those individuals who are especially experienced will demand some type of D&O insurance in place because they know that's the best and last line of defense to protect their personal assets if they or the company gets sued for allegedly doing something wrong. Theft of assets in this space, depending on the type of company, is obviously something a lot of clients talk about. And for theft of asset insurance, that translates to crime insurance, or what we call specie coverage, which is the same as custody insurance. Specie, for the most part, it protects assets that are kept mainly offline, versus crime, which insures against third-party hacks. They both insure against theft by employee collusion and things like that. So that's the theft of the assets themselves. The topic of the moment is actually kidnap and ransom insurance, given some of the high-profile events that have happened in this space. So we call that K&R insurance. So kidnap and ransom is a big one. And then really just like typical types of insurance, like employment practices liability insurance, if an employee sues for harassment or wrongful termination. And there are a few others. Specifically for Bitcoin miners, property insurance is a very big focus point. And then, of course, for just all companies, general liability insurance is a necessary business coverage too.
Yeah, you give a good list there of many different ones, which is awesome. Maybe kind of talking through like some of the conversations you're having with clients at a high level, like who's using certain types of insurance. I mean, obviously you can do anything for any type of client, as you mentioned, right? Any specific hot buttons or trends you're seeing in real time and now in 2025?
Yeah, that's a really good question. As we move towards more regulatory certainty, D&O insurance was already something that a lot of companies were looking for, but it continues to be, because D&O insurance can insure against regulatory investigations or regulatory proceedings. We're moving in such a great way right now in the US as far as gaining regulatory clarity, but there's still a lot of uncertainty about what's going to happen tomorrow, what's going to happen 4 years from now when we have a new president in place. So D&O insurance is pretty big for all companies, especially those who are, who do have to be licensed and comply with regulations. So those are, could be exchanges, broker dealers, things like that. A lot of our tech company clients who provide custody solutions, they're not themselves custodians, but they create the technology that others use to custody assets. For those clients, a lot of companies right now are looking at a combination of cyber insurance and crime insurance. So that really ensures the theft of assets that could happen because of some type of cyber incident. Tokenization of real world assets is a big topic, discussion point right now for a lot of different types of companies in this space. So for that, depending on what the client does, crime insurance is important. Business interruption insurance is important. Trying to think what else. Again, like Bitcoin miners, property insurance is just definitely the hot topic of the moment, because if the miners go down and if a Bitcoin mining company is unable to earn revenue from mining, obviously there's interruption to their business and they like to be reimbursed. So there's just, for a very conservative industry, there is so much that insurance can do. And despite the fact that most of the markets are very traditional, they're doing a decent job of kind of keeping up with the trends in the market and being accessible, which had not been the case when I first started in this space about 7 years ago.
Yeah, makes sense. You had me thinking about just a thought when you mentioned that, just people trying to adopt this change here. How many insurance providers? I know you guys are a broker. I mean, how many are out there supporting this new ecosystem? Is it a dozen? Is it less? Is it more? I'm just curious because it seems like it's always been hard to find insurance traditionally for this space, and now Obviously, you guys are involved in this. I'd love to hear kind of what your thoughts are there.
That's a really good question and a hard one to answer. I would really have to sit down and look at like a list. I mean, I would say 30 plus markets. It's really good. It's totally different. I started in this space on the insurance side of the world in 2017, 2018, and maybe we were seeing maybe 5 to 10 insurance markets across the globe that were open to talking to companies in the digital asset ecosystem. That has completely changed. And there's still a lot of work left to do, but it's such a different world right now than it had been.
Yeah. So take us back. Kind of what made it so difficult to really start with, on the crypto side of things back in 2018? What were, some of the things that people were struggling with back then? I'm sure I could easily probably list or think of a couple, but, kind of tell us how the landscape has evolved over the years.
Yeah, back then it's funny because it's hard to remember. It's like literally night and day compared to today. Back then there was just so much uncertainty, even though this space kind of started to come into existence back in, let's say 2012-ish, or maybe even a little bit earlier. 2018 is when we started to see a lot of companies really start to look for insurance. And the regulatory environment was unclear. No one knew what regulations companies in this space had to follow. And it was not for a lack of wanting to follow regulations. We had so many clients back then who were talking to regulators, but regulators themselves just didn't know how to classify companies in the space. So lack of regulatory certainty made the insurance markets very uncomfortable in this space. Back then we weren't seeing a lot of experienced directors and officers coming into this space. So that also made insurance companies uncertain. There were a lot of, the press did a great job back then of talking about some really negative things that were going on. So that also, from a reputation perspective, that kind of put off the insurance markets. And then you look at today, in the last couple of months, since the US has a new president, has completely changed. But even the year or two before that, there was just Bitcoin hadn't become mainstream. It was so far from that, but there were still conversations that traditional financial institutions were having around the space. And the fact that they were talking about potentially incorporating digital assets into their traditional businesses, insurance companies all of a sudden really did have to start paying attention to this space. Plus, starting back in, I'd say 2018, brokers like Lockton and some of our competitors, we were all focused on educating or helping educate the insurance markets. And so I think the insurance markets themselves have done a great job of really learning and trying very hard to understand the space, which has made them also more comfortable. So,
and I would add to that as well, where, being more on the consumer side of this for more years than I've been in the insurance world. To Sarah's point, around 2018, it just kind of hit the mainstream a little bit more. And then fast forward to call it 22, 23, we start seeing institutionals get involved. And, the 50, 60-year-old with some cash in their pocket starts going, well, should I invest in Bitcoin and should I start getting involved? And, I think we've seen a lot more curiosity around the space the last 2-3 years. Excited to see where it goes. But I think just that sentiment alone, with kind of creating more of a mainstream narrative, I think the NFT world kind of, goes up and down as it does. But I think that drew a lot of attention. People are making obscene amounts of money. And, from an insurance perspective, to Sarah's point, I think a lot of our job as a broker is telling a story. And, on the carrier side, making people understand what this business does and why insurance should be in the mix, and also educating the client around what they should be buying, how much insurance they should be buying, and I like to use the example of a manufacturing facility that a carrier's never been inside. They've never done an inspection or anything, and they just assume it's a fireworks manufacturer. And so the risk goes from here to here, and they go, okay, well, this thing could blow up any minute, so we're going to charge you out the wazoo. And that's where we kind of step in and not only tell the story around what our client does, but also get our clients in front of these underwriters, because they're the best stewards of their own journey and the businesses that they're building. And no one's going to be able to tell that story better than the client.
Yeah. Do you guys find that obviously with the ETF narrative, with Bitcoin ETFs coming out, with E&O and E&O being part of that trust framework already, but now someone has to know the asset class from an insurance perspective. Do you think that helped kind of pave the way for more insurance opportunities with the retail product, or what are you guys' thoughts there?
I think we're getting there. It's still a changing, and to Sarah's point around new administration, there's still a lot of uncertainty and unknown. I think Sarah could talk to kind of the conversation she's having with the markets and our clients. But I think we're moving in that right direction. It's being talked about a lot more. It's being taken a little bit more seriously than it used to be, which is exciting. But Sarah, feel free to add some more color on some of the conversations you're having.
Yeah, no, I agree with everything you said, Michael. I mean, the fact is, like, our most traditional clients are now incorporating digital assets into their business plan. And insurance companies love those traditional clients. So they've really had to expand and diversify their willingness and, what their types of companies that they're willing to work with. So it just kind of is all played together really, really nicely.
Yeah, on the ETF side, so I think I think that's maybe a good spot to start. So Skylar kind of alluded to, like I assume a lot of these like larger institutions already had things like D&O, maybe general liability insurance. Kind of, what are some nuances when it comes to ETF issuers on the digital asset side, Sarah?
Yeah, I will say the more traditional ETF issuers have had probably all the insurances we listed initially already in place. So, where the nuances come in with the digital asset exposure is honestly making sure that their current policies still work, that there aren't gaps in coverage, that there's no exclusions in their policies that exclude something that could relate to digital assets, whether it clearly, as an exclusion that clearly excludes digital asset exposure, or something maybe a little bit more hidden that, working with an experienced broker, that person, that group of people can really look at those policies to make sure that there isn't something standing in the way of coverage. But for the most part, traditional ETF issuers, even now with their expanded appetite, have the right insurance in place. Again, you just kind of have to look at the nuances of it to make sure it still works.
Yeah. I would say, or a question I have on, because like custodies, I would assume is probably the biggest difference between the traditional markets and the crypto markets is when a crypto market, or when a crypto or an ETF provider, I should say, is issuing these digital asset ETFs, are they, is most of that insurance, like on the custody side, is that coming already from the custodian, or do they also need their own insurance policy?
It's a really good question, Mike. And honestly, it's very nuanced depending on exactly what the client is doing and who the custodian is and how they're interacting. For the most part, the insurance comes from the custodian itself. However, the ETF issuer does need to make sure that their coverage also picks up any potential liability for something that results in a loss to their clients, but even that happens at the custodian itself. So that probably sounded very confusing, but again, like the custodian really is the one who should have the insurance in place, and then the ETF issuer's own insurance policies either should be tweaked, or they might need to look at something as an add-on to make sure that they're picking up any residual exposure that the custodian doesn't pick up.
Yeah, I like, obviously, like some of these ETFs are getting huge in size. Like maybe, for example, like the custodian's insurance covers up to $1 billion or $5 or $50 billion, but maybe the ETF issuer has to pick up some additional like to cover that. Is that a thing?
Yeah, that is definitely a thing. But also, an ETF issuer should look at the custodian's insurance policy and see and work with a broker, but line up the custodian's policy with the ETF issuer's policy and figure out where the gaps are. And then the ETF issuer probably should add coverage for those gaps to their own policy. But you're right, like custodians have so much under custody that there just isn't enough insurance through the traditional insurance markets, and the ETF issuer can pick up some of that exposure on their own. We have this conversation a lot with companies that kind of use a single custodian for all of their assets. While the amount of custody insurance in the insurance market is capped, for a company who's not a custodian but who relies on custodians, if they diversify and use more than one custodian, they can try to maximize insurance that way as well. So there are a lot of different, like, again, and I keep using this word, but there are a lot of nuances to this space, and there's a lot of fun and interesting ways to kind of make things work the right way. You just have to invest a little bit of time and find the right people to work with.
And I think to add to that as well is, as a broker, especially in a very, to use that word again, nuanced space, it's our job to educate and look in the future around kind of where this space is going, kind of merge together all the conversations that Sarah and her team are having, and I'm having with prospects and clients, to start to think a little bit more outside the box. And I think a tough part in this space is, I think a lot of people just don't know what they don't know. It's new. Change is a scary thing. And we like to take that on every single day and advocate on behalf of our book of business and the folks that we work with. And on the flip side of that, building relationships with these carriers and the markets so that they understand when we're bringing something to their doorstep, it's not, it's not something that shouldn't be taken seriously. It's, we're bringing something to them to try and find the right solution, right fit for the insurance program, the type of coverage, the limits of coverage.
Yes,
Sarah,
it sounds like there's a lot of customization that's taking place from your guys' perspective.
Absolutely. And again, it's, the framing of who we're working with and where they're going, and how to position them best for the future.
Yeah. Well, to your point, Michael, what you said about kind of building relationships with the insurance providers too, I can imagine, I mean, you guys are on the front lines with clients that are doing a lot of interesting things in real time. I'm assuming there's probably a little bit of education to the insurance provider that you guys are providing too. And like, hey, this is how they're using it. This is how they're operating their structure, if you will. Is that still, did they keep up to date with their education process pretty well as well on the insurance side? Or is that something you guys are kind of working in tandem together?
I think the answer is we hope so. And, we hope they're taking that seriously. And I think as it's starting to hit the conversation starting to hit the mainstream a little bit more, people are double clicking on the idea of insuring this type of industry and this asset. But I would say that, a lot of kind of what I'm doing in my day to day is getting in front of companies in this space and, plugging them in with Sarah and her team and just having a candid conversation around, hey, what do you guys do? Where are you guys headed? And how does insurance fit into the mix there? And then we go out and we talk to our strong carrier partners to tell the story and start to work with them to procure the right type of coverage. And, I think it's, I just lost my train of thought, but Sarah, I don't know if you'd add anything else in there.
Yeah. I mean, I agree with everything you said, but to add to it, it's kind of like a dual-sided education. Like the insurance markets are constantly learning. And I have to say, they're doing a very good job of dialing into underwriting calls, talking to our clients, meeting for coffees with our clients so that they can learn more. But it's also an education on the side of our clients and prospects as well, because those who are newer to the space or those who are newer to just owning a business or running a business, explaining to them why insurance is important is a real thing. It's not a given that everyone understands the value of insurance. And I'll never forget, I think it was the first conference I ever spoke at, and I think it was in maybe 2018 or 2019. I went on stage right after someone who's very big in the industry, and literally during his panel or during his chat, he said that insurance doesn't pay claims, and it's something that I immediately addressed in my conversation topic because I've seen.
Let's hear what's the biggest discrepancy there? Yeah.
I mean, and I think people get like health insurance confused with corporate insurance. Mm-hmm. My background is I'm a lawyer by background. I started in this in the insurance industry on the claim side. I've seen insurers pay millions and millions and millions of dollars, and that has added up to billions over the years. Now, this space is new for the digital asset space, but insurance carriers have been around forever and they've been paying claims forever. So insurance does pay, but again, to your point, like it's an education process on both sides of the equation.
And Sarah, I would add some color if you can around kind of the claims team that we've built here, not only on your team, but throughout the entire Lockton organization. As a producer, I think the easiest way to get fired is to have a claim not be paid. And so we have a team across the globe that are vertically focused or just generalists that support our clients in getting claims paid. But Sarah, I think you got a little bit of a better approach just working with your team and the teams across our financial services pro exec group.
I mean, you honestly summed it up pretty well. I will say when I joined Lockton 4 years ago, I came in to lead our global crypto team, but also to lead our financial lines claims team. So claims is genuinely like true to my heart. Like, you buy insurance because you need someone to pay claims if something goes wrong. We have the largest claims attorney team in the U.S. from like all of our competitors. Our team is the largest. Fortunately, most of the claims that our digital asset clients have had tend to be just typical D&O type claims or employment practices claims. And I see them firsthand because I really want to make sure claims get paid and I stay involved. I have seen our claims attorneys do amazing things to make sure our clients are taken care of. And so we genuinely have such an outstanding team of claims people across the world that work together when you need them to.
Yeah, I could definitely see that being helpful. You guys, as a broker, you're working with the clients and then you're also working with the insurance companies to kind of make sure everyone gets taken care of there.
And it's also, I think, Mike, not to cut you off, but to Sarah's point, I think a lot of folks don't really like to talk about insurance until something goes wrong. And then they ask the question, am I covered? And so not only is it the front end of making sure you're procuring the right levels of insurance, but the back end, because stuff happens and things go sideways. When those things happen, making sure that our team is driving strategic change across that organization to say, hey, we've put these, risk mitigation levers in place that will hopefully stop this from happening in the future. And from the carrier's lens, they see a claim being paid out. They go, okay, that client isn't operating as effectively and efficiently as they should be. And so we're going to increase in their insurance cost premium X%. And so with Sarah and her team and our claims team coming in to kind of not only fix the problem, but put in solutions that help stop that, that's where we can tell the story back to the markets to say, hey, we understand something went wrong. Here are all the things that we put in place to stop this from happening in the future. And really the goal and hope there is that they go, okay, they did the work, they understood something went wrong, and they did the work to prevent this moving forward. So we feel a little bit more comfortable continuing to insure this company.
Makes sense. That's, like the immediate thing. I keep circling back to custody. I'll get off in a minute, but the that's definitely something that comes top of mind where it's hey, whatever, going back to 2018, hey, we're now implementing multi-sig wallets. We're implementing different type of custody. Kind of, what are some of the other things, focusing in again, maybe on the custody side of things, what are some of those other things that have evolved over the years and that are on custodians' minds and insurance providers' minds as they're insuring these custody providers?
Yeah, I'll say, I think, and now it's old, but I think the biggest innovation on the custody side from an insurance perspective had been when we started to see a shift from multi-SIGs to MPC to multi-party computation. I think, once insurers understood that with MPC, there was no single point of failure, that was a huge, aha moment in the minds of insurers. And that was something that was really interesting to watch evolve. All of our custodian clients, whether they're true custodians or whether they provide the tech behind custodians, they obviously, they're all concerned about the theft of assets. They never think it can happen to them, which is fair. But it is something that they know that they need to be prepared for if it does happen. We've seen some of our clients now just, move from multi-sig to MPC, or for both, like evolve, and now there's backup key recovery services and things like that. So the custody space is continuing to evolve. From the insurance perspective, it's also evolving. Years ago, custodians would only buy specie coverage. For the most part, that was really what was available. And specie coverage is amazing, and it's great custody insurance, but it's a little bit more limited than crime insurance. And so we've seen even the specie market, which is a very traditional market, we've seen them evolve to offer not just cold storage coverage, which is what we all used to call it, but now they've expanded to offer some warm, some crime coverage. So they're also evolving along with the industry too. Like, the underwriting for custody risks is really, really interesting because it is the most detailed underwriting I think we do as a insurance marketplace. We like the questions that are asked, that it doesn't even take that long. It's just there's a lot of back and forth and a true need to really understand, or true desire to really understand, what the custody risks are for a specific custodian, so that insurance can be set up in a way that actually responds the right way if something happens. And so I think there's been an evolution both on the custody side of the world, but also on the insurance side of the world, as they kind of play together in the space.
And like Bybit, recently got hacked. So, kind of jumping into like events, like things that are happening, things that are occurring, like the Bybit hack was obviously huge. And I'm sure you got a ton of phone calls after that event happened. What's it like since then? Like, how are you guys thinking about these different exchanges that you guys are working with?
Without getting into details about Bybit, what many of our clients are doing is distinguishing themselves from what happened in Bybit and explaining why what happened in Bybit could not happen to them. So it's interesting to see that custodians are getting like ahead, like way out in front of that, and they're proactively explaining why it can't happen to them, what they do differently. So to be totally honest with you, the conversations on the insurance side, there's been some questions. There's obviously been some questions, but it hasn't been a huge negative, because our clients are way out ahead of it and explaining what they do differently. So it's actually worked out pretty well. And I think back to like the FTX implosion timeframe.
Yeah.
Like, to me, that I think could have been had a bigger impact on the insurance world. It actually, I don't think did, thank goodness. But ever since then, there's been a lot of, discussions in our side of the insurance world around, why are these losses not insured? Is it that these companies aren't seeking insurance? Is it that we as an insurance industry aren't willing to write them? It's been an interesting couple of years to just kind of watch all of this evolve.
For sure. I'm curious too, just as you're talking to clients, the barriers to entry and getting insurance, obviously you're going through the kind of understanding their business, what do they need, both qualitative and quantitative, their process, where are the gaps, as you guys had mentioned, where are the potential risks, counterparty, key man, technology, all the things you kind of rattled off a bunch of them there. What's the kind of the starting point, because I can think of 5-6 years ago, the rates were crazy too, right? It's hard to even make sense to even write the check to get insurance. What's the kind of, the time frame to look at that? Obviously, there's a lot of things happening. I'm just curious kind of how you guys have those conversations with, and to your point, everyone's probably different, right? For everyone that's doing different things. Maybe I'm in DeFi, I have a different risk mechanism than somebody who's just trading straight, on a qualified custodian process, no cold storage, things like that. I'm just curious kind of how that conversation happens in real time for you guys. How do you kind of go through that process with them?
Well, I would say there's a need component of what you need, but then, on the client side, what you want. And, Sarah, correct me if I'm wrong. I look at it through the lens of like traditional SaaS, like venture-backed companies that are either bootstrapping and they're, cash is king, or they're raising a seed Series A round. And the cost of insurance is not always their favorite thing to hear, because, when you have 8 months of runway and you have to spend 2.5, 3 months of runway to procure coverage, you're weighing the options. And And so, back to the storytelling and the education on both ends of the spectrum, from the client to the carrier, I think that's kind of our job to help find the middle ground of like what's going to protect our clients, but not put them in financial jeopardy. Sarah, I don't know if you want to add some more around that, around the conversations you're having with our clients that are very young to very established in the space. I think there's a big difference between the two of kind of that want and need comparison.
Agreed 100%. And to be fair, my internet cut out for a second, so I missed part of what you said. So apologies, but I agree. I mean, it really is so dependent on where a client is in their life cycle. There are needs based on regulatory requirements or contractual requirements, and there are wants, but we always try to understand our client's specific priorities because, quite frankly, a lot of the times pricing is a priority. But from the beginning, we're very transparent with our clients. We want to understand their business so that we can tell them what insurance we feel they need and why. We could tell them what we think pricing will be. We could talk through what the process will be. We could go through the process with them and they could buy what they want to buy. We make recommendations along the way, but ultimately it's up to the client's specific priorities.
Yeah. Well, you guys said too, sounds like there's a great more number of insurance carriers or partners you can work with, which maybe will help with that, from what it was 5 years ago to what it is today. Pricing conversation can probably be drastically different than what it used to be.
And I also think it's on the carrier's risk tolerance as well. Like, where do they want to put dollars to work? And do they want to be the voice in this space that's helping innovate? I don't know how often, Sarah, you and your team are tapping into the E&S market. I think that would be a conversation here that would be relatively educational, but just for your background, E&S stands for excess and surplus, and we go through what's pretty much a broker for a broker. And so, you've heard of the big carriers. They sponsor all the golf tournaments every single year in the PGA Tour. And then there's hundreds of these other carriers that you never heard of. And so for very specific risks that the traditional markets don't want to touch, we'll engage with our E&S partners. Sarah, if you want to add some color around kind of what that relationship looks like in this space and kind of the dynamic between us and them.
Yeah, I mean, we do what's best for our clients, whether it's working with a market we can access directly or working with a market that we have to go through a wholesaler, which is what Michael is referring to. For us, and again, we're so transparent with our clients. If we get better pricing and coverage from a wholesale only market, we will absolutely work with a third-party broker to access that coverage. On the flip side, the negative is that if there's a claim, you're working through another we would work with the wholesale broker to get to the carrier. So it just adds another component to the process. But we really do what's best for our client. Pricing has come down significantly since 2017, 2018. There's so much more competition now. There's just so much more insurance appetite in this space. It definitely helps. Yeah, more knowledge. It also helps that the financial lines, so like D&O, for example, having nothing to do with digital assets, it's a soft market right now. And so insurance companies are fighting to make budgets. So they are looking for whatever great companies they can underwrite. So their appetite has just expanded because of that naturally too. So pricing is way more favorable than it used to be.
Yeah. Would you say that just kind of sparked my thought process there on, there's a lot of fintech push for new opportunities in this space, AI being a big narrative for many, GPU, more technology infrastructure, and then obviously inherently more risk outside of even just digital assets. That kind of adds to another layer, which people seem to be wanting to cover on insurance. Does that come up on your guys' side quite a bit too now?
100%. There's such a crossover between fintech, AI, and digital assets. Yes, it all helps.
Yeah.
Yeah. There's one, so I think last year, I want to say there was like a pretty big like kidnapping on the crypto side, and it's starting to, or seemingly starting to occur more. I saw one just recently, like some guys, founder's father was kidnapped, and you mentioned the ransom insurance or the kidnapping insurance recently. What does that space look like? I couldn't imagine how it could be done. How are you guys thinking about this?
So Kidnap and Ransom, K&R Insurance, first of all, I'm going to say it's very cheap insurance because there are very few kidnappings, fortunately. We were very concerned because there's been a few kidnappings in this space in the last few months. We were very concerned the K&R market would start to shift, and fortunately it has not. High net worth individuals in theory are always at risk. So that's the first thing. So in theory, like what's happening right now in the digital asset space shouldn't impact the market. K&R Insurance is interesting because if a company buys kidnap and ransom insurance, they are not allowed to talk about it. So a very small group of individuals at the company are allowed to know that insurance exists, but no one else is allowed to know. The amazing thing about kidnap and ransom insurance is that most time, depending on which insurance company you work with, it comes with services, like it comes with, and Michael, now I'm totally drawing a blank on the types of what they call themselves, but it comes with support services. So if something happens, you can access this control group, the security group, and they'll coach you through the entire thing. Because obviously if a kidnapping happens, chances are you're put on the spot. It's not something that happens every day. You also get the benefit of working with that security company before an event too. So there's so many benefits of buying this coverage that is very cheap compared to everything else in the space.
Yeah, that's really interesting. Obviously, being a broker, you can probably see the different types of things happening across many different players.
Yeah, we're the ones getting the phone call at 2 a.m. on a Saturday, and we're all hands on deck. And that's the beauty of this world is it's a 24/7 job. We have our lives outside of this, but at the end of the day, we're dealing with people's businesses and livelihoods, and it's just as important to us as it is to them. I say this to my clients as well. Like, I work for you, and Sarah and her team, we work for you. And so we're an extension of your risk management team, whether you have somebody in-house or, we're your external risk management support team. And I think it's a really important narrative that we like to talk about a lot.
Are there areas of insurance that most crypto companies are not thinking about, or there's like a large gap where it's like, hey, you guys obviously should have had that insurance. There's been other companies that are talking about this now. Is there any trends like that you guys are seeing?
I would say historically, very little cyber and technology errors and omissions coverage was bought in this space for whatever reason. It was always an afterthought. Companies now are starting to buy it, but I don't think it's purchased often enough.
I know recently, Sarah, we had a conversation around fat finger trading coverage. I found that to be very fascinating because I've been a victim of that in the past in my own personal life. It stings. I know it's something that we've worked on in the past, but I think it's a newer idea that's kind of harder to get over the finish line. Would love to kind of hear kind of the conversations you've been having in that respect and the appetite for that, and kind of where, as it continues to climb through the mainstream in this space, where it becomes relevant.
To be totally honest with you, no one is talking about it. No one has asked about it since you and I started talking about it. So to your point, it is something that companies should be thinking about because they're not.
Yeah. Well, especially to your guys' point, fat finger trading in crypto, no less, where trying to get the money back and from a wallet or something like that could be problematic. You would think it'd be on people's radar, at least heightened from that perspective.
It stings, and once you do it one time, you hope to never run into that again, and you learn from your mistakes, and mistakes happen. But as long as you're learning and evolving and adapting from those lessons, I think that's the key. But in our world, it's how do we get in front of those mistakes? And that might not even be on the client side. It might be, a user of the client's platform, and kind of thinking through all the different angles in which risk can pop up.
Yeah, there's at least two other areas that I want to dive into that are still on my mind. Tokenization. What are some of the insurance risks you guys are seeing out there with tokenization?
So when tokenization first started to kind of pick up, we were so lucky. We have an amazing client in the space, a traditional client And they really wanted to understand what the real exposures were. So we did this huge brainstorming session. It was more than one session, to be fair, but we had an insurance company fly in from an international country to sit with us, and we went through this whole brainstorming session. And I don't want to give away what we came up with, because I think where we landed on what the unique exposures are is still something that no one else is talking about. But Mike, to try to answer your question without giving away anything from our side, it depends where a client sits in the space. So if you're tokenizing real world assets, those physical assets presumably are stored with a traditional custodian. So, a State Street or Fidelity, those, putting aside the virtual token part of it, but they're actual physical assets. So those assets are secure. There should be insurance in place. So then the question becomes, now that you're digitizing that and enabling the efficiencies of trading and things like that, like what could the potential exposures be? Is it downtime? Is it loss of trading revenue? So there's a lot of different things to talk about when it comes to tokenizing assets. It depends what you're tokenizing. It depends where those assets are stored. And it depends where in the process that the client sits.
I think from a user perspective, I mean, this is a narrative I'm super excited about. Something I didn't share in my intro is I come from a real estate background. So the tokenization of real estate, I think I've sat in 3 or 4 different calls through communities that I'm in that talk about that. And when you really understand the technology and the efficiency created in that world, whether it's real estate or art or cars, whatever it might be, to me, it makes a lot of sense because I've spent, a handful of years understanding this industry and this space and how it works and where it goes. But for somebody who owns a home that's, in their 60s, that has never dealt with this type of infrastructure or technology, it's Chinese. And, I think educating folks and, pushing these ideas to the corners of the room that aren't being exposed to this. I'm super excited about where that goes across all different types of assets, mainly real estate, because I think it's a no-brainer. There's a handful of companies right now that I'm tracking that are, the Zillow or the homes.com, but they're doing it through tokenized assets of real estate and selling property or renting property on the blockchain.
Yeah. Real estate's an interesting space. Obviously, it's been a lot of treasuries, and that's, seem to be I would maybe think the spot in RWAs that has taken off the most. How about on the DeFi side? Anything on the DeFi side that, companies should be thinking about?
DeFi is interesting because, our clients tend to be institutional. And so you think of kind of the labs component of DeFi, that would be a client of a large broker, and they can buy insurance for themselves. But in theory, it's a struggle when it comes to buying insurance for the protocol, just because they're decentralized and they can't, to remain decentralized, they really shouldn't or don't want to do anything that specifically impacts the protocol itself. We've had a lot of conversations with DAOs and with governance bodies who actually govern the actual protocols. And there's different, like some DAOs want D&O insurance depending on how formalized they are. Smart contract insurance is a thing. High net worth individuals who invest in various protocols, like they can buy smart contract insurance. So if something goes down with the protocol, they can withdraw their funds. And if they can't withdraw them in time, there's insurance to kind of fill the backstop. So smart contract insurance is definitely a real thing in that space too. It just kind of depends on what angle you're looking at it from.
Yeah, kind of going through your thought process there, talking about different jurisdictions of insurance coverage, right? Maybe I'm in Mauritius and I don't have certain access to certain markets, or maybe some challenges of getting into certain positions in crypto exchanges or whatnot versus others. Has that come up from a risk mitigation or insurance perspective?
Yeah, geography definitely plays into it. I would say most countries can buy insurance, whether it's potentially not through US insurance markets. Our team is global. So we work with markets in Asia and London. Most London markets can write virtually anywhere in the world. So even those more remote places, there is access to insurance. They just have to find the right brokers to help them access the right insurance markets. But jurisdiction plays an important piece, or it has an important role in this space, because looking at D&O insurance, for example, like there are so many US insurance markets who are comfortable with D&O in this space. In the UK, there's a lot less. So for clients that have a US address, we can access the US markets. There's greater competition, which drives down pricing, helps get them better coverage terms, versus a client who doesn't have any access to the US markets. It's a little bit more challenging.
Anything that keeps you guys up at night? Is it regulatory uncertainty? And anything else that, you guys or your clients?
It used to be regulatory uncertainty. I think we're moving in a good direction. I think we'll have some certainty definitely within this administration. For me, it's claims. Claims keep me up at night. People don't talk about it. Companies still don't understand the value of insurance. Companies are very focused on pricing, and they should be. But then when a claim comes in and they don't have enough insurance in place, they kind of kick themselves for it. So for me, I wish more people were talking about claims and the value that insurance brings, because insurance carriers do pay claims.
100%. How do you guys see the insurance market evolving in the next, 3 to 5 years in crypto specifically?
I think we've been moving in an amazing direction compared to 7 years ago. I think it's only going to improve. I think pricing is in a good place. It's still slightly higher than for non-digital asset clients. But as more and more traditional companies are starting to use digital assets, or starting to kind of, incorporate them into their business plan, the traditional insurance markets are really going to start broadening their appetite even more. So I think we are moving in an amazing direction.
I think to add on to that as well, I think curiosity is growing in this space, which drives more conversations for us to have with our clients, with the markets. And I think it's, to Sarah's point, as things continue to move in the right direction, new administration trying to push regulations in the right way to, one, give clarity as to, what you should be doing and what you shouldn't be doing. I think there's been a lot of gray area over the years. Things are becoming a lot more clear. And it's opening doors for conversations that I don't think have been had over the last, decade.
Yeah. They're definitely well needed in the space for sure.
Cool. It's about it on my end. Anything that we haven't brought up yet that, is interesting to talk about on your end, Sarah?
Just that I think there is still, while the insurance markets still have room to become more educated, I still think on the ecosystem side, there's still a lot more room to understand the value of insurance for any type of company. And I think there's a misunderstanding around, we had a lot of prospects become clients, but the hesitation has always been, how much do you cost? And brokers don't charge clients. For the most part, we make commissions. The insurance carriers end up paying us, even though we are representatives of our clients, not the insurance companies. So talking to an experienced broker is free, and having them help educate you as to why your specific company needs insurance and where the value is, that's free education. And I just think that's something that's not taken advantage of enough.
Yeah, it's a great point. Yeah, definitely. If you're in the crypto space, always makes sense to reach out, talk insurance. Worst case, you just have a conversation, get to connect with somebody new. So this has been awesome. Sarah, Michael, really glad we were able to do this. Thank you guys so much for joining us. Where could people go to connect with you guys and learn more about Lockton?
Thank you for having us. If anyone can obviously reach out to us via lockton.com or on our LinkedIn page. We also have a YouTube channel. But really, we really appreciate this opportunity. So thank you both.
Yeah, thanks again, Mike and Skylar. You can reach me on LinkedIn. Relatively easy to send me a message. Always happy to have a conversation and bring Sarah and her team along to see where we can support and continue to educate the community.
That's awesome. This has been great, guys. We'll make sure to include all that in the show notes as well, all your contact info.